in 2022, SoFi's stock was down 80%. They were rapidly losing money. Analysts were calling it a failed company. But quietly, they turned it around. Today, SoFi is posting record profits. And over the next few years, they're trying to become a financial powerhouse. Think your bank, your broker, your lender, and even your financial advisor, all inside one app. I'm Sidma, and today I'll explain why SoFi stock is a compelling investment opportunity. Part 1. What is SoFi? SoFi, founded by 4 Stanford students in 2011, started as a student loan company. But fast forward to now, and it has evolved into a digital finance platform. SoFi now operates across 3 core business lines. Number 1, lending. They offer student loans, personal loans, and home mortgages. This accounts for about half their total revenue. Next is their financial services platform. This includes the SoFi app, where users can manage cash, invest in stocks or crypto, get credit cards, and even file taxes. This is SoFi's consumer-facing ecosystem. And number 3, technology platform. Through their acquisitions of Galileo and Technisys, SoFi now powers the infrastructure of other fintech apps. This generates recurring revenue, which has helped SoFi turn a profit. SoFi has over 11.7 million members, up 34% year over year. These members have deposited almost $30 billion into SoFi's ecosystem. In 2023, they had $2.1 billion in revenue and are on track to hit almost $3 billion this year. Not to mention, their profit margins are also increasing. Their adjusted margins climbed from around 9% in 2022 to nearly 25% in 2024, and it's going to be around 27% this year, proving they can scale without burning through cash. But is this growth sustainable? SoFi isn't just a banking company like JP Morgan or Bank of America. It's a technology company. Their subsidiary Galileo powers platforms like Chime, Dave, and Vero, providing the APIs that enable digital banking and card processing. Plus, in 2022, SoFi also acquired Technisys, which builds core banking software. Think of it as the engine that runs a digital bank from the inside. Together, Galileo and Technisys give SoFi something very few fintechs have: a vertically integrated tech stack, one they fully own and operate. This has done wonders for the company. Galileo alone generates around $400 million annually with high margins, while Technisys platforms allow SoFi to save in excess of $70 million annually through vertical integration. As more fintechs, neobanks, and even traditional banks shift to digital-first platforms, the demand for back-end systems like Galileo and Technisys will skyrocket. Here's how that would play out. By 2032, it's projected to hit $150 billion. Let's assume 40% of that, about $60 billion, goes to back-end systems. If Galileo captures just 15% of that market, that's $9 billion in annual revenue. On top of that, SoFi aims to reach 50 million members by 2030 and expects each member to spend twice as much as they do now. That alone could add another $16 billion a year in revenue. Even if their financial services segment doesn't grow at all, we're looking at $25 billion in yearly revenue. At their current 30% profit margin, that's $7.5 billion in annual profit. At a PE ratio of 20, that means SoFi's market cap is $150 billion. For context, SoFi's market cap today is only $25 billion, so the upside is massive. But of course, there are risks. Here's how they stack up from least worrying to most worrying. Number 1, interest rate risk. As a lender, SoFi is exposed to rate volatility, which can impact borrowing demand and loan performance. Higher rates will hurt SoFi. But as the Fed is expected to start cutting rates soon, this shouldn't be a big concern. Number 2, execution risk. SoFi is managing rapid growth, multiple business segments, and tech integration. If SoFi doesn't grow as fast as the market expects, their stock price could take a hit. And number 3, market sentiment. Okay, this one is SoFi's biggest risk. SoFi is still tied to the fintech narrative. If tech starts to sell off in 2026, SoFi's stock could tumble. But if you believe in SoFi's vision of revolutionizing fintech, led by former CFO of the NFL and Twitter, Anthony Noto, this stock could be for you. If you found this deep dive helpful, make sure to like and subscribe for more videos like this. Next time, I'll be talking about another groundbreaking stock that powers AI companies. And no, it's not NVIDIA. If you believe AI is the future, this next video is for you.